Hello, welcome back to Trade.Set.Go. This is our second live and I'm super excited. My name is Yiannis. You might have seen me in the videos around on Trade.Set.Go. I'm content lead and today I'm going to be taking you through another amazing event. I can see people piling in. We have some familiar faces in here. Hello everybody, hello. I know you're super excited for two things. One, for the incredible webinar that you're going to be getting today, that we're going to be analyzing everything about drawdown. And because we're doing another giveaway, by the end of this session, we'll be giving away 3,000 accounts from the Fivers. These are challenges that are high stakes with a 10% challenge milestone for the first round and then 5. So it gets easier to pass on the second if you find it easier in any way. Hello. I can see some flags coming in. Let's see. Sir Jones, I see you. Brilliant. So what we're going to do is I'm going to post in the link for you to participate from the get-go, just to give you a chance to win these challenges that are going to be coming out on the end. All you need to do is go and follow that link. Make sure you subscribe, like on all the socials. And then we'll do the giveaway live with you here to find out who the winners are. And as always, the winners are going to be contacted by the team and then you'll have, and there we go. There's the giveaway. Let me just show you. Perfect. So make sure you go onto that link, participate, because this account might be the account that you're looking for to become financial free. That's how I started as well, with a very small account. And the dreams came true after it took a while, 5 years, but I did become consistent. And then we're going to go through how that works. And especially today, because we're doing everything about drawdown, the maths, I'm going to be using specific formulas that you can use on your accounts to make sure you never blow out. I had this conversation today with one of our members in the Discord. I just see it pop up and he said, I just blown my account. I wish I had this webinar earlier. Now, risking a whole account on one trade or one use like Trump is the way not to do it. So we're going to find out what we need to do to be successful. I'm super happy to be here with you. So let's go. So, master the hidden math behind sustainable trading. This is what I decided to call this because it is about maths. And a lot of people don't really look at the math side because they're afraid of it. A lot of us back at school were not very good at maths, or we didn't have that tendency to look at that information in that way to have meaningful information when it comes to trading. Or we're too scared to look at the truth of what's going on behind our accounts and so on. So today I'm going to give you a simple version of it will be plug and play for you to see why certain setups, especially with risk, just don't work, especially when it comes to risking bigger percentages on your account. So we're going to look at that. Hello, I see you. Briman, hello. And please, as we are doing this, please put your comments in because I want these to be, these live webinars are for you and they're extremely valuable. And I wish I had them when I was starting trading. So this playlist and all these live webinars and all the content that we have at Trade.Set.Go have one thing. They want to create amazing value for you to become successful. And we're doing it for free. So tune in and make sure you get your pen and paper because we're going to need it today, and your brain sharp. If you have coffee, wherever you are, for me, it's a little bit late to have coffee, but let's see what the agenda looks like. So on the right side, we already talked about tonight, we're going to be giving away 5,000 high stakes from the Fivers, 10 and 5% targets. You'll also be getting what I call the geometric truth calculator. This is going to be in the Discord. If you haven't joined the Trade.Set.Go Discord, make sure you join it because we have multiple tools in there and multiple webinars that you can find us out. Now, this one is going to be very specific. It will tell you if your strategy is failing with your current setup. So that's going to be super, super useful. Now, on the left side, let's talk about the agenda. We're going to talk about why a lot of the times the maths that we use lie to us. What types of maths do we use? One, for instance, is win rate. A lot of people obsessed with win rate. We'll see, is that a good metric? The other thing that we're going to look at is at the means. A lot of the times we look at our trades and we average them. We do it in an arithmetic way, and you're going to find out what is a different way to do it that actually gives you a way to analyze your performance for the future to see actually if it would have an impact or if it does work, or to change it before you blow accounts. Then we're going to go into how losses, especially sequenced losses, one after the other, compound, and they're detrimental compared to your wins, even if those wins and losses are the same percentages. So we're going to look at that. Then we're going to talk about the what I call the survivability threshold. What does it take for your account to survive long enough to compound and to build capital? We're going to do that. I'm going to show you a walkthrough of the live tool that you will be able to use today on your accounts. And finally, what are the 3 things that I would recommend you to today to change on your setups to make sure your risk is managed, and it will be very, very practical. So I think this is going to be a good one. Hi, Trader, and hi, Kurai. I think I said that right. Hi, Wave. Hi, Sija. Let's get some flags in there. I want to see where everyone is at. I was quite surprised from the flags that we saw in the last one. We had a lot of people from Uzbekistan, which was nice, which is Uzbekistan is also in the World Cup. You know that we're running currently the World Cup leaders board, and that is going ahead with some great giveaways every week. And congratulations to all the winners. Hey, give me an account. The accounts will be given at the end after the webinar. I can guarantee you we'll make sure that the winners get them today. Right, so let's talk about one of the things, our first get real moment. In Trade.Set.Go, we have these get real moments where it wants to bring reality into trading. Your win rate is not protecting your account. I learned that I did learn that in the beginning of my trading. I was trading a system where I had 80 to 90% success rate. But the reason that was working was because I could get small chunks out of the market consistently, but then it would be one trade that would take and blow up the account. So we need to understand that win rate. You may have a plus 60% win rate, a positive expectancy, and on paper that looks great, but these accounts more than often can blow up. Not all of them, obviously, but if there is a strategy that works for you, but this is something that we're going to tackle today. Hello, Rafael, long time. Nice to see you as well. From Kenya. Nice. Where else have we got? Let's see the countries. India. Kenya, India. Let's see who else is here today. This is a big one. And put your thought brain on, because we're going to talk a little bit about the gain and the loss on an account. So a 50% gain and a 50% loss average to 0. Isn't that what we've learned at school? So how an average would work, you will add all the numbers up and then you would divide it by the number and it would give you the result. So if, for instance, I have an $1,000 account and I have a trade that went for profit for 50%. So now I've grown that 1,000 account to $1,500. And then the next trade loses 50%. So pretty much the same. So I won 50%, lost 50%. Would that equal 0? This is my first question to you guys. Does the account is break even when we go up 50% or and immediately after we lose another trade that is 50%? on paper, it should be 0, but it's not. You're actually down 25%. And the reason is because the first trade built the account to 1,500, but then the big loss of 50% reduces it to 750. So there you got a 25% loss. That will play a big role when we come to understand the difference between arithmetic mean, which is the normal mean that we know from school, and the geometric mean, which is something that we're going to be using from now on. So you've always seen this at school. It sums your returns, divides it by the number of trades. It is the normal thing that everyone teaches you. But unfortunately, a lot of us are using this in trading. And it doesn't really work like that in trading because our account capital is constantly changing. And that has an impact. So I see some surprised faces there on the 750. Yeah, it is surprising when you actually see, wait a minute, I just gained 50% and then I lost 50% and now my account is 750. How does that work out? That's why we need to know the maths. Now, what is a geometric mean? You don't need to know this. I'm just giving you, for the geeks out there, maybe we have some geeks in here, but you don't need to know this. This is all going to be in the calculator. It's for you to understand what happens and how you can track better your actual future balance. So on the right side here, you will see the description of the geometric mean. In simple terms, it's an ability for you to track the actual percentage improvement of decrease of your account based on the capital balance organically, dynamically. So it tracks the steady change of rate. That's all you need to know from this. I'm not going to go detail into the maths. You can go further and look into geometric means and what they are applied in, because they're applied in multiple things. But for our purposes today and trading, it's really important for you to understand that geometric mean means that we're tracking rate of change. So you've heard this one before. I'm sure you have. A 50% loss needs a 100% gain to break even. And then everyone's like, how does that make sense? Why wouldn't it be 50%? Let's have a look. Losses and gains are not symmetrical. So let's say we lose 10%, then that 10% needs 11.1% to recover. That's a small difference. But when you compound that with multiple trades, 100 trades, we'll see the impact that that has. A minus 20% loss needs 25%. How does that make sense? We're going to find out in the next couple of slides. So these are the biggest thing about geometric means is that it doesn't matter on the order of trades. Someone might say, I have 3 successful wins and then 3 successful losses. Or I have win, loss, win, loss, win, loss, but it's the same. Or I have 3 losses and then 3 wins. All these in geometric mean value is going to be the same. So your accounts are still not going to perform great if you don't have a positive geometric mean. Very true. I see some, this is highly valuable. I appreciate that, guys. And well, that's what we're hoping. Yeah. I mean, these geometric means are used in so many areas, but they're also used in trading. Institutional traders is you can track performance of someone very clearly by looking at how they're doing. So if you have a positive geometric value or a negative geometric value, you can tell if an account is going to be blown up very, very quickly. So that's something to keep in mind. So let's have a look now on an actual example. So 10,000 account. What if I take my first trade and I'm down 10%? We said this earlier, that it requires 11.1% to recover that. But this is where it gets interesting. If the next trade I add a 20% loss, you would think it's 30%, but it actually increases. It compounds the impact on the account. So now we're needing to get 40% back to recover the 30%. What if I add another 30%? So I've lost 60%, but suddenly now I need to make 100% to recover that account. And we all know how hard it is to recover an account when it's gone down to 50%. And that's why you hear all this. How does that make sense? How does does a 50% need 100%? The reason is because as you are taking the hit on the account, so let's say let's reset this. You're taking a 10% hit, okay? So now your base of your account has jumped to 9,000. So the next 10% that you're losing, you're not losing it on the 10,000, you're losing it on the 9,000. So that automatically is making the account smaller and smaller and smaller and harder and harder and harder to get it back. Let me see. Can you explain again? Yeah, I'm here to explain this because I think as soon as you get this, it will make so much sense to do all your accounts in this way. Also, the positive effect of this is that it actually amplifies on the profits as well. So if you add a 10% and then a 20%, because your account is increasing in value, the next 20% is compounded on the increase of the account, if that makes sense. So now instead of making 30%, you're making 32%. So those small gains work massive improvements onto your account. So that is the positive side of geometric means. So something that we always need to pay attention is that the loss is way more important. Controlling the loss is way more important than the gain. The gain with compounding, it will come. But the loss, when it happens and you have to recover 100% of that account, it's very, very, very hard to do. Hello from Vietnam. Hello. It's a neat explanation. Thanks. I appreciate that. I hope it is, because I know it's a little bit of a tricky subject, but I'm going to try and get everyone to understand the concept, because if you can understand the concept, then you can go and take it and do it by yourself. So you don't need, this is a big one, another get real moment. You don't need a better system. You need to survive long enough to use the one you have. How many times have you jumped from a system to a system when you've done less than 100 trades or even 30 trades? Because you're saying, well, I'm not sure about this system. I'm not sure if it's going to work. And then you jump onto the next system and then you don't know if it's working or not. So this gives you a framework where you can go and put it into the calculator and say, right, I'm going to give myself 100 trades. I'm going to see if my geometric mean is positive, which means that this account is going to be trading in a safe manner and it's going to be growing. Or if it gives you some alerts, then it might be a good opportunity to maybe think of a different strategy or add little bits of different strategies to yours to make it your own. So now let's talk about the survivability threshold. So we have 3 main buckets of where every trader belongs in. You, me, everyone. So if the geometric mean is +1, that means that the compounding effect is a positive to your account. If it's 1, it means you're flat, it's not moving up or down, you're just consolidating like in trading. Or if it's less than 1, which unfortunately 90% of the people have who don't track this, and you can be the ones that track it today, it's guaranteed that that account will blow up eventually. So this can be a really extremely useful tool and insight for you when you're trading. So you may have seen the results there. Let's see if you did see them. So let's do a little task. If you haven't seen it, great. So trader A, trader B, and trader C, they all have 60% win rate. The average win is 3%, 5%, and 4%. The average loss is 5%, 2%, and 3%. Now, their arithmetic average, which is adding all their trades together and divided by the number, is giving them 0.2%, 2.2%, and 1.2%. Okay? So what do we think the geometric mean would look like for these guys? Would this be positive for the first trader or negative? Don't line. No wonder I battled to get out of drawdowns. Absolutely. This is just a numbers game. And the sooner we understand the numbers game, the earlier we can get up and track, improve our accounts and our systems, because it's very easy to go and say, oh, I didn't do my system correctly, my entry was wrong, and so on. Are we having any more webinars like this? Yes, we are. We're having a webinar, live webinar every other week. So we're hoping to give you as much value as possible. So negative, I see here. You would be right. So we have a negative of 0.28. That account, unfortunately, is not looking great. And if you look at the numbers, someone will say 60% and you're winning on an average of 3% and you're only losing 5%. That's not a bad system, but it is. It is not. Now, if we look at the trader B or C, let's see. C, you can see he has a positive geometric mean. He's winning 4%, he's losing 3%, so that percentage adds into the geometric mean. He just has above the geometric mean. So this is going to be a profitable account, but it's not going to be a one account that you're going to be like, wow, what a performance, even with the 60% win rate. And finally, soon as we hit 2 geometric mean and above, that's when you start seeing the bigger jumps in the accounts. Now, obviously, you need to be able to return 5%, let's say on a month, or if it's in a year or whatever you're trading. Now, I know a lot of people try and do that in a day, and that's where the risk happens. But you can see the impact of the compounding effect that has on the same account when the geometric mean increases just a little bit, even just 1 point. These are the kind of things that I need to use in my free time. Absolutely. So will I get this tool? You will get this tool, guys. You will. Positive geometric mean compounds. Negative geometric mean destroys. This is the one thing we need to understand. If you see a red number on your setup, we need to change things. Otherwise, that account, it might take a year, it might take a year and a half, but it will blow up just because the maths don't work out. So 3 numbers for survivability. We talk about win rate, we talked about average win percentage, and we talk about average loss. Those are the 3 things that you need to be tracking on your system. It's difficult getting an account from a 2% drawdown. Is it difficult to get a percent from a 2% drawdown? I just saw that question coming in. It's by Eric. Let me show you this. Now, the difficulty about the account is what is your profit? So if your drawdown is 2%, what is your average? And this is where it comes to here. What's your average win percentage? I blow, oh, sorry about this. I blow more than 4% because of risk management. Yeah, and remember, guys, this is not to tell you, oh my God, this is what you're not doing. You need to improve this and you need to prove that. It's more for you to know what tools you can have out there. What are people doing differently that are successful, that they're using in their own time, like you said. So the biggest thing to take today, and when we go into the tools and everything, it's survive first. It's all about survival. We go crazy about the giveaways, I know, and we know the giveaways are coming. So make sure if we can have the link in for everyone to sign up, make sure that you sign up because the giveaways are going to be They're going to be 5,000 high stakes. So this is a very good account for you to start and to apply the tools that we're using today. So survive first, compound second, win third. That's what the thought process needs to be for everyone who's doing either CFD brokers trading or the prop firm trading or wherever you're trading. That needs to be your thoughts. You need to be analyzing your trades historically, and you need to make sure that you have a geometric mean that is positive. 3 adjustments that you can do today. One is cutting losses. That is one of the biggest things that you can see the impact of the geometric mean that has is the position or the size of the percentage loss. So we had a question about the 2%. If that 2% is too big, then we need to go size it down, because we don't worry about the profits, because soon as you have a positive geometric mean, the profits will start slow, but as you're increasing your account, you're getting bits and bits and bits more than you did before. So let's say you're taking a $10 profit today, tomorrow it might be 12. And the next day it will be 15 or whatsoever. Data is everything. I trust only the fivers, sir. Well, luckily we are all in the same family, so that's good. Okay, let's see here. This is a good question. How do you balance conviction in your strategy while remaining flexible enough to accept when the market proves your bias wrong? And what tools do you use to consistently maintain your edge? TJ, great question. I'll just reread it. How do you balance your conviction in strategy while remaining flexible enough to accept when the market proves your bias wrong? Now, those are things that we need to, in my opinion, is that we need to have predetermined risk parameters with every single trade. I don't know if you watched the last webinar on leverage. One of the biggest things was about defining what you're willing to risk and what's appropriate to risk on your account at any moment of time. So even if your bias is wrong, let's say your bias is wrong, and you want to be a little bit more flexible, you want to manage that trade, if it's within the parameter risk that you've set, then it doesn't matter. You can take the knowledge and say, okay, my bias was wrong, but maybe I can get this to work. Or if you're doing tighter stops and tighter risk reward, then that bias, it will show you the outcome anyway, and you will take the learning into the next. Do I use a tool to consistently maintain your edge? Yes, the tools that I'm providing here are things that I did in an Excel version. I've got it all in my books, but I'm giving it to you all in an HTML file, so you can use that organically and use it as a digital version of it. So I'm hoping these are helping. There's 2 more tools in the Discord. One is on leverage and one is on risk management. Just reading some comments. Right, so cut your losses size. That is one of the biggest important things, not your win rate, right? So a 1% reduction in average loss has a bigger geometric impact than a 5% increase in win. This is key to understand. So you protecting your downside is more important than a big 10, 15, 20, 30% win. That has to go into the brains. Because if you do that, that's when you're starting to see profitability. One of the things that everyone talks about is about win rate. We need to stop measuring win rate as a performance, and let's start adding geometric mean, not on every single trade, because we need numbers, right? So we need a quarterly measure, maybe 30, 50 trades. You have to allow time to see if your strategy is profitable. Size position to protect the geometric mean. Now, this is the other things. Imagine if you're in a lever, the 2 biggest things that you can do for your account is decreasing your downside and decreasing your exposure to the market, right? You can do that by reducing your size. Yes, that is going to take a little bit longer to become financial free. But if I told you, if I gave you a contract now and I told you, hey, if you sign this contract and you did all these steps, you will be financial free in 3 years. Would you drop everything and just do it? You would. So the same goes to trading. Allow time to educate what your strategy needs to be, and allow time for you to correct things that are not working. And one measure that you can do that is the geometric mean. Okay, so let's see what we got next. So here's the tool. I think you're going to love it. It's, as we discussed earlier, we talked about the survivability verdict on the right side here. You can see you on the win rates. You've got average win percentage, average loss, trade count, so how many trades, starting capital. So you can put your capital in here. Let's say you're starting on a $1,000 account and your win rate is at 60%. Your average loss is, let's say, 5%. My average win is 5%. So I'm winning 5%, I'm losing 5%. You can see that over 100 trades, it shows like I am on a 1 on arithmetic mean, but now we know that arithmetic mean doesn't work within trading. We need to get the geometric mean above 1. So this will be, I would claim it as, it says growing, but it's on the verge, is on the threshold. It is still growing, so you can see the impact that it does have. And I'll show you a little bit of the live version of this, where you can see below, it gives you the actual trades for the 50 and 100. It's really cool. But you can see the impact of increasing your average loss has. Just increasing your average loss to 8%. And how many of you here have hit your account at an 8% in any moment of your trading career? I've been there. I've 100% been there. My expectancy drops to 0.41%. So I cannot let the drawdown, the average loss, go to those levels because it's not going to be profitable. So is a geometric advantage, even if it's a small one, important? Yes, it is. Consistent position sizing, yes. And the long-term outcome you will see on 100 trades, that's when you will see the biggest impact. Especially if you put your numbers in and you see that your geometric mean is at 1 or just below 1, when you amplify the trades, you will see that that account will always lose money. Is it true that most traders don't know this information? Yes. Not a lot of people know this information because I am a data scientist. I'm a little bit of a geek. I always spend hours and hours on Excel sheets, and I did it for my previous job as well. I was performance analyst for Team GB at the Olympics. So data matters. And if you want to be successful in trading, you have to create an environment where it supports your performance because you're performing. You're like an athlete. You're going against the markets, against other traders who are trying to get money out of the market. So the better you are prepared, the better you understand your risk, the better you understand geometric means and arithmetic means, it's more likely that you will be able to protect your account and not blow it. So yeah, if we think about it, we're talking about growing consistently, size risk correctly, not building massive risk on the account in order to build with a compound effect, which can grow the account really, really big with time. Okay, so that is the main thing. I wanted to show you now a walkthrough of the tool. So let's see, that's a huge gain in percentage. It is. Geometric, any compounding effect on you doing things correctly will have a massive impact on your trading down the line. That's the most important thing when it comes to with trading. And small percentages compounded, you can have a really, really good life by not chasing big performances on one trade. So let's have a look at the calculator. This is the calculator I told you is a lot better than the demo in the presentation. This is my little baby, and now it's yours. So I can show you here on the left, you've got win rate, average win, trade count, starting capital, geometric mean, survivability up here. This will tell you if it's working or not. The formula, if you want to do it manually, I don't know why you would want to do it manually. And then some information here on the glossary. So this is what you didn't see in the webinar. The bottom here, it gives you a scenario build-up of 50 trades, 100 trades, 200 trades, and 500 trades. So if you do your first 50 trades and you want to see the impact that it would have, let's say it took you 2 months, rather than sitting there and doing another 2 months, you can see here what it would look like for 100 trades. So let's get some realistic numbers. Who here, give me some percentages. Let's see some realistic numbers. Who here has a profitable win rate? Who is trading with a number that is bigger than 50%? I would hope a few of us. Let's see. I'll wait for the number to come in. But we'll put in, the next one is, what is your average win percentage? Is it 1%, 2%, 3%? So mine is around 72%. And I average in normally quite small, about 1 to 2%. 36% win rate, but very high expectancy. Okay, let's see that actually. I haven't done that. So if you're on a 36% win rate, and let's say you're winning, I'm guessing you're winning really big for that to work. So I'm guessing that you're winning, what would that be? 10%, risking what, 2%? Something like that. So then if that was your strategy, it will tell you that it's on track, it's growing, and it gives you a geometric mean of 2.3, which we know is very, very good. Wow, I'm in your mind there, 2%. What's the average win? If you can tell us as well. So yeah, even if and this is what's cool about this tool, around 7, okay. So we're winning 7, losing 2, over 100 trades. That is looking great. And this is what it would look like on your geometric mean. So you're above 1. You're not massively above 1, but you are above 1. So that is important. Now you can see if your average win drops a little bit, let's say your average win drops to 6%. If it drops to 4%, you're on the threshold. So you know that that account is going to be at risk of not doing so well, because you can see here, we went from thousands of dollars now to just hundreds of dollars with 500 trades. And if you drop below 4%, then your geometric mean turns to negative. And you can see the impact of that has. So you get the idea, guys. Okay, my win rate is 80%. Let me share this one. In Asia sessions, but not profitable because of risk management. So when it comes to maths, you don't know yet. Maybe it is risk management, but I would rather you think of like, let's put my numbers in and see what that does. Because a lot of the times we have these preconceptions of what is going wrong and right. A lot of people might say, oh, it's my psychology. You know, I lose a trade, I overtrade it, and then I blew it. I had a bad day. But actually, the second and third position, instead of being placed 20 pips, it was 40 pips or whatever that is. So you need to be able to have an objective way to analyze your historical performance. So whatever that percentage is, you're saying it's 80%. For an 80% win rate, we're talking about I'm still doing it, but you need to understand it's a bit of a tricky one because you're winning more than you're losing, but when you're losing big. So this is very impactful when it comes to your winning. Because if you're winning less than you're losing, you can see how easily that turns negative, right? So we have a positive expectancy if you are able to lose 3.5%. How do you access this tool, Nanpon? In the Discord after this live, I'm going to put, we have a section where it's webinars. I'll have it there so you can use it. And please let us know in the general chat in the Discord if you find something useful and the webinars here, and comment on the channels and like, guys, because more traders need to access these tools and this information. So as you can see, even with an 80% win rate and just an average win of 1%, and you can have a losing percentage of up to 3.5, you still have a profitable system, but it's 0.08. Talking about cutting it tight. As you decrease your percentage, you can see that very quickly goes dark. So that 80% needs to be held for this to be successful. So someone might say that is not realistic. So maybe aiming for bigger percentages and a less profitable win might be. But this is totally you guys. You have to put your numbers in. You know how you trade. If you also have things that you want to add to this tool, maybe we can have a discussion. We can have a section where you can ask me, I wish I had 1,000 trades in there or whatever. I wish I had this element in there. Let me know, and I might be able to add it in if everyone thinks this is something that is useful. Great lesson learned from the webinar. I love it. Thank you. I appreciate it. Right, so we've got we're coming in towards the latter stages of the session. Any questions on this tool right now, or generally the webinar and the geometric mean? If you have any questions and you want to answer them now, let me know. Also, if you do want to take part in the giveaway, make sure you have clicked on all the links. We've put it into the comments so you can take part. Where will we comment? Make sure if you're in the Discord, in the general chat, you can tag me as well. I normally look at all the chats as well, or our moderator will be on it. So if you find something that you would like the tool to have different access of different abilities, let us know and we'll make sure we do that. Mm-hmm. Okay, so I think that is behind the visitor. What is the psychology phase 2? Yeah, if you're referring to the playlist, that is the playlist is coming back in Every week you get a evergreen video that comes out, and that is fully educational on psychology. We released the CFD foundational playlist as well. If you want to know how to trade on CFDs, there's going to be another playlist as well next week. Give you a little bit inside. There's a video on candlesticks and trading, and all about how to read the charts. So that will be really useful. Make sure that's going to be coming out next Wednesday. So make sure you subscribe so you don't miss that. Where can I find the mean calculator? It will be in the Discord. So after this, make sure you go into the Discord, and there's a next section there where you can find all the webinars and the tools. And everything is free. Yes. So before we do our giveaway, let's have a quick look on the market. My, oh my, did Trump catch some people out? He definitely did. We had the G7 coming up. We had a busy week this week. I don't know how you guys found it, but that candle here on the daily, look at this. Boom, boom. That is one way to cripple anyone who's been going long on pound USD. Now, I was long on that trade. If you remember, we do every Mondays, we do a live trading room where I show you how I trade, and you'll be able to know what all these lines are, what all these previous daily highs, and how I trade, and so on. Talk about the commitment of traders report. So make sure you come on Monday through the Discord for the live trading room. So pound USD is looking like it's not found the bottom yet. It will be interesting to see if it's going to retest a bit lower. This is what I'll be looking at. 1315s. See if this is going to be pushing. If it pushes below that, then it gets a little bit dark for the pound dollar. But as you know, with currencies, everything oscillates, right? It's not like the NAS, for instance. Look at the NAS gapping up on the news and then getting a rebound and then pushing up on the deal with Iran. So we've got the S&P also looking positives, the Jones and the DAX. Now the DAX is trying to push for those highs. It's interesting. I need to move my previous highs. We are trading above the previous daily. So that will be interesting to keep in mind. Gold, obviously, when news comes in about positive for the US, we see obviously a push down for the gold. And we're seeing that. It will be interesting to see on that massive bull run, who's going to be brave enough to be shorting gold right now. But these signs looking not bad, is it? So the highs are being rejected. We're getting double weekly red candles here. If you break it into the dailies, looking like we're pushing. These are futures, by the way, if you're confused on how it looks. And the silver. The reason I have futures is because I do some technical analysis on the commitment of traders reports. So that can only be done on the futures. And finally, Bitcoin. Bitcoin is also been looking lower and lower. We found a support there on the 60s. Who thinks that we're breaking below? I don't want to be the one who's going to call it, but it looks highly likely. But yeah, look at this head and shoulders forming there. Yeah, and let's finally look at the Forex news. Obviously, the biggest news that are coming here, we had the FOMC, which is coming up today. This is a big one, actually. Expect quite big movements of this. Not massive, but big movements, because we have new chair, and this will have an impact. We've also got the minutes, meeting minutes, which always move the markets, but not as much as unemployment rate. We can see here a drop to 4.9 from 5%. also played a role into the drop-off. And Friday, we've got retail sales, so not much going on Friday, which we can look at. If you haven't done yet, guys, make sure you join this. I will be very sad if you've been sat through the webinars and you don't get a chance to win one of the giveaways. So make sure you click on this so you can take part in this. I do want to mention, talking about, obviously that in the family of the Fivers, Trade the Pool, Futures, Trade.Set.Go, we are doing the FIFA leaders board and so on. I was super excited about England performing like a different team, I have to say. I'm half English, half Greek. Unfortunately, Greece didn't qualify as well as Italy, which is my wife. But I was very, very pleasantly surprised of how England played. So I'm looking forward to be disappointed again. Hopefully not. But there is a theme there. Portugal had a little bit of a funny situation with Ronaldo taking that penalty and not making it. So your predictions, I know you're putting your predictions in, and there's weekly giveaways that we're giving there. So yeah, and also Messi. It was nice to see Messi to have a hat trick in his first appearance after winning it. That was pretty cool. Pretty cool. Okay, we're getting closer and closer to the giveaway. Let's see if we've got any questions left. I am from India. My English is not good. Your English is better than a lot of people, I can say. Give them time. Just age Croatia team. That is true. That is true. I'm not going to have my hopes up, even though every English person currently feels like this is the one. It's coming home. There was virtually no discussion of rate cuts. Yes, that it was. It's interesting because I'm not the conspiracist here, but with all the things that are happening in the world now, it was interesting to see such a dull announcement in the FOMC. Gold sweeps previous week's liquidity. What should gold next target? This, I always find it like, so for instance, this is a weekly chart. Let's drop down. Actually, let's do spot gold, and then we will do the giveaways. So this sweep is what we're talking about. Now, when the liquidity, if you call it liquidity, stops or area or resistance or support, whatever you call it, it's all the same thing. When a price goes to a new level and that level has not been there, when was the last time that we saw 4,021? We have to go back here. 21 November 2025. So it's a long time. There's going to be a reaction. That reaction is being settled. Now you can see the areas that it took to or if you want to call these fair value gaps, expansions, or whatever you call them. We found a nice area here. And now it's starting to push down again. So it will be interesting to see that obviously everything looks like it's going down from this, and where that level might be looking. Obviously, this is not advice, by the way, and just commentary for educational and for entertainment. But, oh, where's my select? Okay, so where could be the next level is the retest of the lows, which a lot of people don't want to hear. if you're long on gold. Is it normal I can't reach payout after 6 months? Says this is a key one. I'm guessing you're from the prop industry and you're from the fivers, obviously. Yes, it's very normal, and the fact that you're around shows a lot of the positive things about your trading, because a lot of people, if they're stuck around 6 months and they're not being profitable, they're like, this is not for me, and they move on. But like with anything, have you ever been in a position where you can learn something in just 6 months? No. Think of a language. It takes you 3-4 years. Same with trading. You need to see everything. You need to learn new knowledge that you did today. You need to apply it. And so on. So it just takes time. It just takes time. So let me see how far out we are from the giveaway. I'm hoping you've all signed up. Let's have a look. I believe we have it. Give me 1 second to put everything in place to announce the winners for today. It's been an amazing event, guys. I'm hoping you found a lot of knowledge or little inputs that are going to change your path on financial freedom. Give me 1 second. So today we're going to be giving away, okay, I can see it. Right, let me see if I can show you. Let me just do the final check. Right. Two seconds, guys, and we're going to have the giveaway. The giveaway today is, like we said, 5,000 high stakes with 10% and 5%. So it's quite a good one. With the potential to change a lot of lives. So super exciting. Okay. Let's see who's ready. Thanks for the class. I appreciate that, Victor. Never been more excited. Super, 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 super. Let me see if I can get this to the right place. Okay, so it's time to share the right screen for you to see the winners. Let me see this window. But not yet. Give me 1 more second. Okay, are you ready? I'm going to share the winners in 3, 2, 1, and here we go. We have Praptic, IP number, I think that is the right one, and Sebin. Congratulations, guys. You have won a 5,000 high stakes account challenge from the Fivers. And I'm hoping you can go away and utilize what you learned today from risk management, from leverage that we did before, portfolio management, and today we learned about geometric mean, a lot of questions about where you can find the tool, make sure you go to our Discord, and there you can also talk to me on a daily basis, guys. And everything, we're going to be doing a lot more live sessions on Discord as well. So make sure you join the Discord and drop us a question or a message, and any other information that you're looking for. Again, congratulations. Until the next time, we are going to be looking for, not next week, the following week, we're going to be live again. Another 3 winners with another amazing content with I won't tell you what it is because I want to keep you the suspense going. But next week is going to be on the CFD Foundation. You're going to have a video on analyzing the charts. So that's going to be a